Good morning, traders and investors. Welcome to Wednesday's edition of Benzinga's Pre-Market Prep, brought to you by Options House. Joe, did you get your suntan lotion out for today?
I was going to say this is a very thought out edition of pre-market prep, considering we are in the 30s, ladies and gentlemen,
Yeah.
and everything is freezing over because all the snow is melting. We have some water damage in our storage closet at my house right now because of it.
We're supposed to go into the 40s tomorrow, so you'll look forward to more water damage there, Joe.
Gotta love it. They come in, they look, the maintenance crew, and then they leave. I think they call that an assessment.
Yes.
Yes, we can see the damage. We'll be back later.
And then they will give you an assessment when they come in and they fix it. They'll charge you extra on your monthly bill. But I'd say big resistance here at 40. I'd say I'm making a stand
At
here.
least for the time being.
Just whatever.
Do you have a time limit on your price target for this weather?
I'm at 40 until like mid-March here. I'm selling all the 40s you can.
I'm at 39.
40, so
I'm
that's
at
a 10-day
39.
price target.
I'm
Joel.
at 39.
You're at 39.99, right? Dennis is sub
I'm at 39. That's the theme today, Joel. That's going to be the theme today. Big resistance at 40, eh? Big
Yeah.
resistance at 40 temperature, and holy cow, that S&P futures, that 40 level is a brick wall.
Yeah, and we're going to talk about it now because this was a level in mid-January. Remember that when we were bumping up here? And I'm like, Dennis, we're going to make a move out of here. I got to put on a strangle. And I was predicting, I wasn't going which way. I wasn't going to say we were going to go to 1940 or 1740. And you failed to come up with the correct option strategy for me.
I love it when he comes up with the idea, and I failed because the option premiums were too expensive.
Yeah, you can't buy that. You can't say, and then look at that. Kapooey, as you would say. We broke down, and now it's deja vu all over again. Here we are. We hit 1738.75 in Friday's trading. Tried to sneak in the 17 or the 1840 handle. You know what, Dennis? It's almost like, like I'm making a stand there at 40 in the weather. It's almost like Mr. Big is out there. And he's putting a top in the market. He's saying, I am selling these 1840s. I don't care all day long. And you know what? There could be an institution or, what if Goldman Sachs and Morgan Stanley and JP Morgan, all conspired to do it. And that's kind of what happens when you keep hitting these levels, that someone is just not letting the market go through this area.
I think there's multiple participants not letting the market go through this area right now. I mean, we topped out how many times early last year in the 40s, Joel? How many tops were there? 5, 6, 7 times, maybe more?
Well, you did right at the end of the year. We have failed to take out that high from December 31st, which was 1846.75. The end of the year, everyone got all giddy, ending the year on new highs. We hit that 1846.75 on December 31st, and that area has just been protected it was protected 6 days in a row back in mid-February, and then now you just in the last 3 trading sessions, once again stepping down a little bit. You had a high on Friday at 38.75. Tuesday 40 and a quarter. Then we've only been able to hit 37.50 in this session. Now, coming down the downside here, Dennis, you got to be all giddy. We're trading on yesterday's low. So, right? What do you got to do? You got to come in and scoop up this market, right? We're down 6.5. That's an anomaly. Get a support going to hold, and we're going to go back up to the 1840.
It's worked every time. I'm a little bit skeptical just because it's been so many times that we've been up there at 1840s. I'm more of a seller of the 1840s than a buyer of 1831 because support is not as well defined here, Joel. Like you go down, we cut through 1831, we cut to 1825, we cut down to 1817 that one day.
Yep.
So support's not nearly as well defined as resistance. I think every time we get up to the 1840s, like you said, Joel, they're probably even stepping down here because the resistance is so well defined. Everybody's trying to get ahead of everybody else saying, well, I don't know if this is going to go through here or not. So it's a big battle between the bulls and the bears right now, with resistance very well defined, but support not that well defined.
And yesterday, when we got up to that 1840 level in the morning, I think we might have went to 40 and a quarter, and then we came back down through the settlement. I really thought that we were going to get that vacuum, get that push because I didn't see anything at the pre-market low, which was 1831.75, and what it did is it went down to 1831.50. Went down by one more tick and then turned around, and I was totally caught off guard by this rally back up to the highs here. I thought, wow, we're going to get through that support level. Now you're having kind of the scenario where we are hitting support, but we're getting that muted kind of bounce. I guess from looking at it, we've had a 7.5 point range. Maybe if we get back up to 1833, 1834, get a little pop there, then you can lean on that pre-market high. But I mean, there's no reason why the market should have stopped at this 1830 even.
Let's move on here and look at gold for a second. Gold actually trading down again. I don't know why, but like we said before, the correlation between gold and the market is all of a sudden positive in the last few weeks. Every time the market goes down, gold goes down as well, and gold is trading down about $4 here this morning. Still holding up fairly well. We haven't had much of a sell-off in the market, not much of a sell-off in gold here either. What's your thoughts here? When is this correlation going to start going the other way again? It's been like 2 weeks.
I'd look at a consolidation here. Instead of it falling out of bed today, what I'd like to see is just hang up here, have maybe an inside day or a couple tight days. Hold this level. Like right now, you have two lows at 12:30, 13:12:30 from yesterday, and 13:14:20. So far in today's session, what I'd like to see is another 2 or 3 days of consolidation. Here you had a 6-day consolidation and then the break. I'd kind of like to see this persist for a few more days and then take out the lows here and get back where gold should be. Back under 1200 here, or excuse me, back under 1300. Don't know if we're going to get back under 1200, but I'll tell you the resistance that you're hitting here right now at the 1340 level that coincides, with some highs that you've had. I better get the gold chart up here.
I was going
Uh,
to say that chart looks a lot like the S&P
yeah, it looks
futures
like
chart. I
the
was like, oh, it
S&P.
is.
Yeah, it didn't switch on me. No, I mean this is you haven't seen gold up here in several months, so I don't know. It's consolidation, and then we'll see which way we break out from that. Right now, I guess since we've had the big rally, kind of leaning towards the downside.
What about crude? It's rallying again here this morning. You just can't derail this crude rally. Gold's down, market's down, crude is up another 50 cents this morning. It was marching yesterday. We basically just took off, it gapped and go all day yesterday, continuing up, and we're starting to get away from that 100 and starting to break out here farther in crude.
Well, yesterday's high in crude was 102.92. We haven't hit that in the session yet. That coincides with a nice round number of 103. So I don't know. I more apt to short it up closer to the 103 level than try and buy it here, and the expectations that it's going to run back up to that high. Looking at it from the downside here, you've had a low at 101.96. That coincides with the close. So we get down below 102 here, and I think you can see some action on the downside. But this between this 102 and 103 here, it's really a coin flip.
Individual stock news. We got MGM just broke with the earnings here about 5 minutes ago. Brent, do you have those MGM numbers? Because it just broke.
Absolutely. Looks like a gap loss of 8 cents per share that adjusts out to a 11-cent per share gain. Looks to be a lot better than expected. The street was looking for a 1 cent per share loss. Also, out of that release, let me just pull up the release really quick. It looks like the MGM China board authorized a $500 million special dividend. So that's not that's
500 million.
yeah, that's not directly related to MGM Resorts Golf Mike, but it's a bit of an indication towards just how management's doing.
Joel, what do you think on this chart? We're popping up here a little bit on this report. We're up 40 cents right now, 26 and a quarter. I'm looking at the double top there from the 17th and the 21st to 26.70 and 26.65. That's the 21st of January. So about a month ago, we did get up into this area. We obviously failed up there. We're about 50 cents away from there. What's your thoughts?
I'm a little surprised that it just didn't go right up to that area. I mean, it
Didn't spike hard.
yeah, it's decent numbers here. So, I would look for that, use that. You have to expect that to be the resistance point moving up. It looks like it did have a little bit of a spike down, but bounced right back up. So, really, the only good number you have there is the number you pointed out, 2665 to 2670, the double top. See if we get up there. Coming back on the downside, excuse me, kind of had a weak close. 25.77 low with an 85 close. So that's your good support area. Below that, we could be seeing the lower 25s.
Looking at Eli Lilly popping right now here, we've got a lot of breaking news that just broke. And Eli Lilly just reported that I never pronounce these right, nobody does. Ramucirumab, phase 3 met primary endpoint of overall survival. Is that, what's that drug? Is that the gastric cancer drug? Anybody know? I think it's gastric cancer.
57 even. Boy, oh
Popping
boy.
big time, yeah.
Oh boy, oh boy, oh boy. That is a big pop here, and that eclipses the former high of the move, which was a double top at 55.78. Exact double top here. Big move for Lilly in the pre-market here. Hasn't seen 57. Holy macro. Since you got to go back until May of
Financial crisis.
yeah. Well, no. May of this year, Lilly was at 57.10.
Oh, yeah.
Yeah.
Yeah,
So
it
there you
was.
go. You got a good level there at the 57. Big move, buck 75. Like to see how this thing hangs out here at the pre-market. Gonna have some size along the way, right, Dennis? Because this thing hasn't traded up here in a while. So we'll see if the book can cap this open a little bit lower. But 57 looks like a little bit overdone here on this news.
Hey
It's
Dennis,
pop.
that's for non-small cell lung cancer, and I do commend you for even trying to pronounce that. I'm not even gonna try.
Okay, so it's lung cancer is what it is?
Apparently,
Okay.
yeah.
All right. I guess right with cancer, I said gastric, but lung, I guess. So similar. So, anyways, Lilly getting a nice pop on this here. We're up $2. We're bid 57.15 right now. So, and I
Wow.
will say, if you look at the pre-market chart on this one, Joel, this has been straight up. So we have not topped out here yet. Since this news just broke right at 8 o'clock Eastern, so 12 minutes ago, they took out the 55.50s, took out the 56s, took out the 56.50s, took out the 57s. We are just straight up here. 57.15 bid right now. Best offer is up at 57.45. It looks like it has stalled, hasn't made trade here in the last 3 minutes.
How
but
much is it
looking
bid
strong.
for? How much is it bid for?
Oh, just 100 shares, but nobody
Okay.
hitting him.
Yeah,
So
I understand.
100 shares can mean a lot, though, because if 100 shares is out to lunch, the high frequency traders are all over everything. So if that 100 shares is priced a little bit too high, they'll smack it. But when nobody's willing to hit that, that's telling me that this thing could potentially want to go higher. And it just ticked 57.45 now. So you can always look and say, oh, what's 100 shares? Well, if 100 shares is bid and it's not getting hit, that's telling me, and if it's a matter if it's bid and it just got hit now. But if it's bid, for 10 seconds and then gets hit, but if it's bid for a couple minutes, which it was, that's telling me people are still uncertain and they think it might go higher yet too. So you can learn a lot from 100 shares. I know back in the day, 100 shares meant nothing. It's not the story anymore. 100 shares actually does mean stuff.
Well, to me, the guy that's been in the 100 shares is the guy that's long about 8 million shares, and he doesn't care, and he's just bidding it up, and then he'll bid, he'll know someone will outbid him, and then as soon as someone bids like for 5,000, they whack him. They're just doing it to pump it up. I mean, 220, Dennis, come on. I mean, this thing doesn't move to $2.20 in, a month, and now it's
They
moving
do on
down.
drugs. These things do move on drug news. They don't move as much on earnings. They don't move as much, but when they have drug news, these stocks, the big pharma can move. We do see big moves every once in a while. Like let's look in February. Look at the move ahead in February, and that was technical here. This is looking pretty good. I don't think this is going to be a stock that's going to just give it all back and be trading back at 55, 50, 56 bucks here. I wouldn't be surprised if this thing does, and I don't know if I'd be chasing it up $2 here, but I'm a buyer of pullbacks and not a seller of rallies. I'll put it that way, just from my own personal perspective. Full disclosure, I do have an investment position in Lilly as well, but that being said, stock is looking strong here this morning.
Would you take 56.95 versus
No, at 56.95 is almost the bid. I mean, you can go
Okay,
and
I'm just
smack 100
asking. You
shares
just
right now.
thought it
Look
was
at this
going
guy
up. I
trying
just
to
thought you'd
sucker
be
me
all
again.
over the 58s. I mean, I thought you'd be over the 58s.
I would say
59s.
So 55.
Better
Let's
get
look.
your offer out there at 60,
Do we need
Dennis.
some conflict resolution here?
Get my
This is
offer out
a.
there at 6.
Well, I need a
Might
pithy
have to get it
name
out
like
there at
kitchen
6.
counselor.
The mediator.
Yeah, yeah. You guys, we're gonna need some arbitration in here. We can't have you arguing in front of our guests. It's embarrassing.
All right. I mean, I'm just trying to get my one lunch back, and
You already suckered me out of those other 2
Oh, that
lunches.
was
And
a.
you owe me the steak dinner. Trying to
I
take me to
know. I told you I'm good
stuff.
on the steak
I want more.
dinner.
Is a solid
Or-
friendship and professional working relationship worth one lunch, Joel?
I mean, I next time, what's that, Omaha Steaks or whatever? Next time they have like a buy one get one free or something, I'll go over there and get you a butt steak or something.
Hey, those
like
are still like expensive steaks,
Rump
I
roast
think.
is good. It's
Yeah.
still good. But Joel, if you're really looking for recommendations and you want to be cheap, you can always use Groupon. Drew's dad leaves reviews on Groupons all the time, and the Detroit Seafood Company apparently is very good.
Okay, all right, I'll keep that in consideration. Des, before we hop into the next thing here, JH3, we haven't seen him in a while here, is wants to get a little opinion here on the C chart, and he says Soros 40 purchase provide a lift at all. I don't know. Did
Soros
Soros?
4Q, his fourth
Oh,
quarter purchase, because the 13Fs came out though. So Soros, you can't read very well there, Joel. The 13Fs came out there, and obviously Soros' position there was disclosed, and now Citigroup pulling down. So not getting a lift here this morning. Wasn't really getting a lift off of it yesterday either. So I would say probably my answer to that is it looks like no. And like you were saying yesterday, Brent, a lot of these, when these 13Fs come out, these are 45 days old here, this news. And it's not as impactful as it used to be, because it seems like people are disclosing these well before in different
Right.
ways.
It's more of for me, I guess it's more of like a tracking thing. Like, okay, let's see what Buffett's doing. Okay, he's got some Wells Fargo, he's got some P&G, whatever. It's good to know. That's how I kind of view it. And Soros stake in Citi was pretty tiny. It was about 2.2, almost 2.3 million shares, so not a huge stake there. That's under 0.1% of the whole outstanding shares. So.
And if you look at it, if George was buying like 30 or 45 days ago, then he's getting some stock in his grill right here, because he would be buying, back in the mid 50s here. They came off the earnings and just pounded this thing. Now you're bouncing back, I guess, from a shorter term perspective here. 50 is the number to me, and we're a stick away from that. We got the 49.91 and Tuesday's trading. Actually, the last five highs in the issue between 49.86 and 50.15 here. So until this thing gets back over and closes above 50 here, it still looks like the downtrend is intact.
I agree with you on the 50 number too, Joel. And I think it's struggling here. And I don't know if you took a 50% retracement. It's not quite to the 50% retracement. $50 just a big whole number. So I do agree with you. Going to be resistance there. But there's been some interesting divergences here lately. We were talking about this in the just before we started the show, how J.P. Morgan, like we talked about yesterday, has been the best in breed. And J.P. Morgan has got back almost all of its losses, where you've got stocks like Citi, Bank of America. Even yesterday, Bank of America had a rough day. Citigroup was down. Morgan Stanley had a rough day. Goldman Sachs didn't have a great day, but JP Morgan continues to climb, and it was up another 50 cents there yesterday. So it's interesting that they're not buying all the financials. They're picking and choosing here now, and Citigroup is not one that's being chosen, but JP Morgan is, and JP Morgan has been marching.
Right. Just thinking if they didn't have the whale trade, where they'd be at here. But got a lower open in there yesterday. The market was flat, made that low very early in the session at 57.90. So I'd be looking at the two lows between 57.75, 57.90. Excuse me, not waiting for a breakdown until we take out that level.
Let's look at a couple other divergences here too. Just wanted to show Procter & Gamble yesterday, because holy cow, that thing popped all the way up 2 days ago. Got up just under 80, and there's a big institution sitting at the point, over 100,000 shares at 80. Was trading up just under him in the pre-market, but then yesterday the bottom just collapsed on this thing, and I mean collapsed hard. Opened up around 79.60 and straight down 2 points. How often do you see a move that violent down in a stock like Procter & Gamble, Joel?
Actually, I did a little piece on this yesterday, and I forgot to send it to you. There was, I go to my handy dandy trusty Benzinga News Pro feed, and I didn't see anything on it at all. Nothing.
Wait, I'm sorry. What did you call Benzinga Pro? Benzinga News Pro?
Pro news feed. I don't know, Joe. Are you just gonna constantly interrupt this morning and correct my grammar?
That's what I feel like doing, yeah.
Okay. The Benzinga Pro news feed, and there wasn't
The
anything.
awesome Benzinga
Yes,
Pro.
the awesome.
Thank you, Dennis.
And then I didn't really see anything, and so I went to and I go to Stock Twits every once in a while, and they had a twit or a tweet, whatever you want to call it, on there, that according to I guess Yahoo does a thing where it tracks earnings per share in between the quarters. And according on this Yahoo calendar, actually Brent pointed out this to me, they lowered their quarterly estimate. I don't think the company did it. Who really did that, Brent? Brent, could you explain that?
That's like the so what Joel's trying to describe is the trend on Yahoo Finance. They have a nice little indicator of the analyst consensus estimates over 1 week ago, 1 month ago, and then something like, I don't know, 60 days ago. So you can kind of see a trend. Okay, the estimates are trending lower, the estimates are trending higher.
Right, and so this had the the trending lower estimate on the old Venezuelan currency devaluation kind of thing, which is the second time that this happened in the last year, and it was pretty detailed on it. And then I went to the usually I don't like to look at anything more than the 15-minute, but I went to the minute chart there, and sure enough, that thing. Whenever that news came out, it really coincided with the decline. But looking at this thing, I mean, it had that. Remember that wild earnings day, Dennis, when they came out with a lower revenue, but they beat the street. They had the major
Pop.
rally, yeah, pop. But it came
Yeah.
all the way back and settled on the low of the day. Actually, that day went up to
Universal.
81.40 and came back down $79 level. So we'll see. Have to see how this plays out. I mean, if they're having currency problems, in one sector, or in one region, who knows? They could be having in other regions as well. And I don't recall any other multinational corporations similar to Procter and Gamble having this kind of problem.
Well, funny that you do say that, Joe, because last night and last time, this was a year ago that Procter & Gamble was saying the Venezuelan currency thing would affect earnings. Last night, Colgate came out and said the exact
Ooh.
same thing. Colgate actually came out. I'll just go to the trusty Benzinga Pro here and read you the headline, bringing up CL right now. Colgate comments on Venezuelan currency development, sees possible loss in 19 to 21 cent share,
Ooh.
reports preliminary estimated 2014 effects in the 11 to 2014 cents per share range. Interesting enough, Colgate is not trading down on this. It traded down about 20 cents on it last night. Very light volume, like 500 shares. But they knocked a couple bucks off Procter and Gamble for this same news, basically, unless maybe this is not affecting it quite as much as it did the PG. But stock Colgate is not responding to this.
And actually, what I did find on the news feed is that on the 14th, I think it was after the close, Procter and Gamble tried to sneak it in. The 4 o'clock close. On the 3-day weekend, and they put out that information, and they didn't budget in the pre-marketed, but until the news, came out Tuesday morning, it was digested. When they hit the stock here, Colgate Palmolive chart looking very eerily similar to the Procter and Gamble chart. Great resistance here at the 63, so love to see a rally close to that level. Probably a big seller at the point there. Coming back on the downside, been hugging this 62 level. I think under 62 here, I'm going to ignore that 61.81 low here and perhaps look for 61.39 area. But interesting, I say no other company is being affected by it, and another company does. So these charts do not look good for a market that's at all-time highs.
Yeah, and Procter and Gamble and Colgate do trade very closely together. You can pair those things. And with Colgate saying the same thing with the Venezuelan currency, I wonder if they'll start whacking this today. It is offered at 62.39, so it's offered flat. S&P futures are down 5.5 points, so the fair value on this thing would probably be down 20 or 30 cents too. Lower beta, so you don't knock it down quite as much. But with the Venezuelan currency thing here, I'm very interested to see. Right off the hop is when you're going to tell if they're going to knock this thing on this news or not. So at 9:30, if they come out and start whacking it here, here, just be careful. Don't be sitting too high because Procter and Gamble, they knocked $2 off this thing. I don't think they're going to do that with Colgate here. It doesn't appear to, because I think they would already be knocking it down pre-market. But you just want to be careful if you're sitting bids out there.
Are you leaning on a guy at 93 in Johnson and Johnson here, Dennis?
J&J does have 20,000 shares up
That's
there
it?
at 93. It's not, well, and the thing is, we know how these institutions are tricky here now. They sometimes don't show the whole order. They'll sit there and they'll refresh, or they'll use the big whole numbers. And sometimes, that's a big, option strike price too. But 93, you're right. I'm looking at that 1, 2, 3, 4 tops up there. So it's telling me there's some major resistance at 93 probably at the point, and there's probably some high frequency and also some opportunistic traders stepping ahead of them.
What about, is it bid there at 92.75, or because I see a couple hundred shares traded there? Is someone
That
just?
was last night.
Oh, last
Nothing
night.
this morning. It's offered 92.73, and you want here? I'll tell you how much I'm offering now. 92.70. Just
Oh,
I
there
just
you
lowered
go.
the
I was
offer.
gonna say.
That's me. That's me. I just marked my order for you.
Yeah,
Want to trade
you're
me,
really
Dennis?
stepping out with
I'll
the.
sell that.
Yeah, you're stepping out. S&P's down 5.5, probably like
Exactly.
a trillion
So
to
why
sell
not
at
throw that out there?
93.
You know what'll happen? And look at the high frequency penny jumper. You see the 92.69 guy? There's an automatic penny jumping program that runs, and I guess it's not necessarily a high frequency program, but there's an automated program. If you go 92.70 and you're out and you're beyond where it should open, somebody will go 92.69. Watch, I'll go 92.65 now. 92.65. You're watching the thing. I'm at 92.65 for 500 shares. Watch, in about a few seconds here, he'll be at 92.64. For it just stepping ahead of you. So then you just give up and you can't be at the top and you cancel your orders. And everybody cancels and then they're happy because they got a really wide market. So now it's making a liar out of me. He hasn't stepped ahead of me yet. He'll be there, folks. He'll come on. Usually, actually, after hours, he's usually within the second he's there. He's a little slow here today.
What do you call him? I know you have names for all your.
I call him the penny jumper.
The penny jumper.
Yeah, I hate the penny jumper. He's always in my way. He's jumping my orders ahead. If I set an order out there, he jumps ahead of me.
I wonder what he calls you.
I don't know. The guy that makes him keep putting his orders lower.
Okay, all right.
Probably doesn't call me nice things. All right. Let's go back to earnings. We've really got a tangent. We started doing earnings, and then we really went on a tangent here. Herbalife, Ackman, not happy again here. Herbalife reported a good quarter. $1.28 versus $1.24. 1.27 billion versus 1.25 billion. Last night, this stock was popping big time, got up to 72.88, has given it all back, and we are only up 50 cents now at 69.40.
Wow, big reversal of fortune here. You're right, Dennis. Did get up to 72.80 on that initial pop. Sits hitting that 72.88 level, finding support here at 69. Kind of like the way this chart is setting up here from a trading perspective. You had a high at 69.18 yesterday with an 88.93 close. We're trading above that, above 69. I like it. Good to go. Below 69 here, I don't think you're going to find any willing buyers in the 68 or 67 handle. Perhaps get down to 66.71.
Also reporting last night and getting murdered here is Lazy Boy. Lazy Boy was trading.
Not Lazy Boy.
Yeah, nobody's sitting back and kicking back in those recliners, at least not this quarter. 31 cents versus 35 cents. Revenue number just a disaster. 350 million versus 378.7 million. So missed big time on the revenue number. They were knocking this down in the 24 handle last night. There's been no trades here this morning, but it was fairly active last night, trading actively in the 24 handle. It's offered at 25.41 right now. Best bid is down at 24.60. I do think it'll probably open under 25 just because it was trading so actively there last night, but no trades here yet this morning.
Well, have I told you my Lazy Boy stories yet?
Okay, tell the Lazy Boy story.
Okay, well, first of all, Lazy Boy's from Monroe, Michigan. That's where I'm from. Okay. And growing up, I was friends with the founder's son, Chuck Knabush. We used to call him Chucky Babe. And I think he's still working for the company. And Chuck and I were pretty good friends, not great friends. And my mom, behind my back, made a deal for me to live with Chucky Babe in Michigan. Okay, and I said, absolutely no way. And I think it was one of the biggest arguments that we've ever had. And so she ended up having to call his mom and saying, Joel doesn't want to live with Chucky, babe. And then it turned out he went to Michigan. And he ended up dropping out after the first semester and going into the Army. But the maker
Wow.
of is that a good story or what?
Wow.
Are you sleeping, Dennis?
No, I'm listening. I gotcha. I
24 is
gotcha.
good support. You had a low at 24.03 on the 19th. We hit that in the pre-market. See if 24 holds. Below that, things are looking ugly down to under 23.
I got a lazy boy story too. One of my buddies actually was cut out of a lazy boy by the jaws of life. I kid you not.
What happened?
I kid you not. Anyways, he was down at a party in Ohio, and I guess it was like this was back in university days. And he came in late from the bar, 3 o'clock in the morning, had nowhere to sleep. And he looks, there's a lazy boy sitting there, just an empty lazy boy. So he's like, oh, perfect, I'll just sleep on that, kind of in a drunken stupor. Anyways, so he kicks the lazy boy back, and then you know how you sometimes if you're drunk, you like twitch a little bit before you fall asleep. He twitches a little bit, and ends up like jerking himself awake. And as he's jerking himself awake, his leg he shuts the lazy boy, but he shuts the lazy boy and his leg's inside the lazy boy. So you know how when you close the recliner part, his leg gets caught in the recliner part. So he's like, well, this is stupid. It's kind of hurting his leg. He tries to open it up with the arm, but it won't open up because you have to open a lazy boy, you have to kind of push it in to make it come out, but he can't push it in because his leg's in there. So literally he's like stuck in the lazy boy. So he's like waking up his friends and trying to say, hey, I need to get out of this. And his buddies are all laughing at him because he's
Wow.
caught in the lazy boy. Anyways, so they're trying to get it open, but nobody can get it open because it has to push in and his leg's caught in the spot where it pushes in.
Oh my gosh.
So they work on him for like 15, 20 minutes, like 30 minutes. There's like 2 people, 3 people trying to help him out to get. They cannot get it. He's like, seriously? He's like, my leg is like turning blue here, man. It hurts so much. He's like, call 911. So
Oh
calls
my gosh.
911. Calls 911. It's like a Friday night. And he says, my friend, he's stuck in a lazy boy. The 911 operator says, we get a lot of serious calls on a Friday night, sir. We don't need jokes, on a lazy boy. No, seriously, you got to get here. You got to get here. My friend is stuck in a lazy boy. Anyway, so they show up. The ambulance drivers or whatever show up, and they look and they just start laughing at him like he's stuck in a lazy boy. It's ridiculous. And anyways, they literally are trying to get open. They can't get open. They go out. They have to get the jaws of life, and they cut the whole lazy boy, like the recliner part where you kick your feet out to. They cut that off,
Holy
and they
cow.
rescue him from the lazy boy.
So what happened to
That-
his leg?
Leg was okay. His leg was
Oh, phew.
okay, but is that
Close
not a
call.
crazy story?
Was there a
And
lawsuit on that?
there almost should be. So those things can be dangerous, folks. Those lazy boys. Maybe that's why it's trading down. Maybe that's
Yeah,
the
better
reason it's
watch
trading
out for
down.
those lazy boy recliners from the 80s.
Yeah. Wow.
They're like
That's
the
Stuck
Ford
in a lazy
Pintos
boy.
of furniture.
That's a good one. Wow. Anyways, that's one. Dennis, that might be your top story here. Were you there for that?
No, I was
Oh,
not. But
you
he was
heard-
telling. I was really good friends with him. He came back on the weekend. He's like, craziest story. I almost lost my leg in a lazy boy accident. I was like, what?
Wow.
Yeah, and apparently it even made like the local newspaper down there. It was some little town in Ohio.
Wow.
Crazy, crazy, crazy. We're going on tangents here, and we're starting to run short on time. Do want to say also guiding lower today. Which mattress firm? MFRM, Brent, you were saying? Guiding lower?
That's right. MFRM is the ticker.
So they are guiding lower here as well, and that stock is trading down $4 here this morning, down 10% at $37. Went out at 41.26. Come into a little bit of support, but kind of below the support here, Joel. What's the technical saying on this one?
MFRM. These mattress companies seem to just really move here on the earnings. Spotty trades down here. We just hit a low at 36.55, getting a little bounce up to the $37 level. Not a lot of volume trading here. You did have a low at 37.05, and that fills the gap here. I don't know, between 37 and 34, this thing looks pretty wide open here. The major lows at 34 even, but don't think we'll see that. Keep an eye on that pre-market low, see if it settles in there. And what about Tesla?
Yeah, Tesla actually did not really get much follow through yesterday. We were talking about it in the pre-market. It was up on the rumors with the Apple, and I don't know about Apple rumors, but it got up to 206, kind of just hung out and then started drifting down there in the afternoon and actually closed not that strong, down another $2 here today. So I guess they're disappointed that Apple hasn't bottomed yet.
Okay, and what do they do to release earnings? It's not
Tesla is due tonight.
tonight.
So
Okay.
often, we do see these run-ups. We've already had a huge run-up in Tesla, before. So I don't know. Should we go look at what the options are pricing in? Let me go take a quick look at the options while you do a technical, Joel. I'll try to see
Just
what
a
kind of volatility.
$200 level. That's all I'm really looking at here. It closed above 200. The all-time closing high here was from yesterday, 203.70. 206 was the high here. So, I mean, good to go. Play it close to the belt here, under 200 here. You don't really have any support down to 197. But
Wow, look at these options. The 202.50, the calls are about 13.25. The puts are about 12.50. This was yesterday's close because it was up at 203.70. So that's pricing in about a $26 move here for the earnings here. So it's pricing in a huge move. So if you're buying that straddle, you're paying big time premium at $26 here. But that's what they're pricing in. You got to pay, I guess, if you want to protect yourself here. But holy cow, it's a lot of premium.
okay, we're going to take a quick break and have Timothy McDermott on.
No, Harlan is coming out right now. Tim's at 9.
Boy, I'm just making all kinds of mistakes today.
I know.
Okay,
Joel.
time to retire. Okay, we're going to have Harlan on. We'll be right back.
Harlan.
Welcome back, traders and investors. We have Harlan Pyan, like lion, right, Harlan? From All About.
Harlan, Ryan, Pyan, Lion.
We don't
Doesn't
want you
matter. Any
lying
way you
on the
want to do it.
show. You're going to get us in trouble. But from
No, I was thinking more of the animal lion. So, the charts don't lie, though.
hey, price
So,
don't lie. And Harlan's here, All About Trends, as a subscription-based newsletter service focusing on individuals helping secure consistent profits in the market by trading what they see, not what they think, hear, or fear. Now, Harlan, I gotta give you some credit here. The S&Ps, when I had you on here last week, we were just kind of wallowing in the 18-20 area, and of course, I was looking for the big break here. And your hypothesis is that we were just kind of really gonna float out. You didn't see anything on the horizon. We were just kind of gonna float up and test those highs. Now, that has been the scenario, but boy, what does it tell you when you have all those tops there in the S&Ps in the mid 1840s, and then you struggle at that level 2 days in a row? Are people stepping down with their offers?
well, it is resistance, and everybody knows it. And that's the issue. For right now, you have to honor resistance. You're up in that zone. You can see that, 2 days doesn't really make a trend. It's a continuation of the, push off the 1740 support level. And, you're up into an area of overhead supply going back, I don't know, most of January. So, that's overhead supply. Anybody who bought in that zone had to ride it down from, 1840 to 1740. What are they thinking about now? Ooh, I don't want to go through that again. So now they're all break even. And they're like, well, I don't want to sit through that, have to deal with that again. I'm just going to walk away and wash on the trade. So you have to work through that overhead supply. Not to mention, you came from 1740 to 1840. That's 100 points in what, like a week? At some point, you got to digest, you got to consolidate those gains. It's kind of like Thanksgiving Day. Right after you get done eating, the last thing you're going to do because you're full, is get out and run around the block. You got to let that digest. And, 1740 to 1840 is a huge move in a short period of time. I mean, look at the NASDAQ. What are we, 39.60 to 42.72? That's huge. That's like a year's worth of returns in, what, a little over a week?
I thought you were
So,
gonna
for
say.
it to take its breath.
I thought you were gonna say after Thanksgiving dinner you have dessert.
Well, yeah, that too. And then you head for the couch. So more often than not. But I think you get the analogy.
Yes, I do.
And so we're here. So, it's an inflection point. We are overbought. If you can look at the full stochastics, you can see you're up in the overbought territory. The relative strength is, starting to push that, that 70 level, where things tend to get a bit overbought. So it's just a matter of, where to from here. You got to look at resistance and honor resistance for right now. We could chew around. Every time you get up into these, after you make a run, you could chew around for 4 or 5 days, and then we're going to find out what this thing is made of. So I don't know. I'm just playing it really close to the vest. I do see a lot of names that, even though the market has, came back up, here we are. We're ready to push into new all-time highs again. What's going on underneath the surface? I did find a really interesting chart last night, and it's the S&P 1500 new highs, new lows percent index. And while the indexes are basically hitting new highs or there, it seems to be that only 10% of the market is hitting new highs. So you got a divergence off of the October. I think it's SUP HLP. At least that's what it was on stock charts. What do you got there?
I don't. What did you say it was on yours? SH.
I don't think we're going to have that.
SUP HLP.
Yeah, I don't think we get that.
Okay.
But which stocks? So okay, obviously we've had this big, we're at where we're digesting here now. We've got resistance very well defined, support still kind of sketchy when I'm kind of looking at it here. But and we've had some stocks, obviously financials kind of weaker here. What stocks are you watching here? Because obviously there's still going to be stocks moving higher here. You had Tesla breaking out to new highs yesterday. You had Netflix making new highs. Facebook failed to make a new high. But which stocks or sectors are you looking, to continue this run here, or are you just hands off right now and you're thinking the overall market here might just fall?
Well, on the long side of the market, I'm not really seeing a lot. Stocks have had some huge runs. I mean, look at Tesla. I mean, when I say huge runs in a short period of time. That's exactly what I'm talking about. And when you see a stock like Tesla, heck, 140 to 203.70 in about a month
and a half. Yeah.
Yeah, exactly. That's a huge run. How much more do you want? I do see it breaking into a new high. That's good, but you're a little late to the party. The ultimate time would have been, I'd say at the beginning of February when they hit that 185, pulled back a little bit for about 4 or 5 days. That's what we look for. We want to see stocks pull back off their highs, and resume a trend. I just don't like chasing a stock with a market at resistance that just ran as far as it has in a short period of time. It's like chasing a bus. If you're chasing a bus from behind the bus, you don't know when that bus is going to stop, and then when it does, you're probably going to go splat.
Okay. What about? I mean, like Dennis mentioned, we have well-defined resistance here at that 1840 level. Don't know if we're going to get a shot at it today, but traders always like to have a two-tiered approach. What do you have a trigger on the downside in the S&Ps or in the Dow or something that you would say, okay, I mean, I know you kind of like to wait and see and stuff here. To me, it's this whole 1835 level, because this is where we got up to in mid-January, where we stalled at. I mean, is there a trigger that you have on the downside that would cue you to say, hey, we're going back to 1800, perhaps going back to test those lows at 1730?
Yeah. Well, in the short term here, I would say, you can come back and test if we're going higher and if we're going to continue. So what to watch for is probably, a pullback to the 50-day. If we pull back 3-4 days and you just can't, if they can't kill them, they're going to run them. The flip side is if they can't run them, they're going to kill them. So, in the short term here, watch the 50-day moving average. I think it's at 1812, somewhere around there.
You're talking about the cash,
So,
though, right?
Yeah, I'm just
Okay.
looking at the cash right in here.
Okay.
So, so I'd watch for that. Resistance is resistance right now. If we're going to go higher, let it pull back and, kind of let them come to you. Just because the market's hitting new highs doesn't mean you have to trade along with it. When we were down at that 1740, the face of fear, nobody wanted to buy anything. Everybody thought, chicken little, the sky is falling. I saw so many stocks out there that were sitting at support levels that were just outright screaming buys when nobody wanted it. Now, everybody wants the market and everybody's all gaga, and I'm not seeing nothing. I'm not seeing nothing on the long side with low-risk entry points. See, that's the key. It's okay to sit there and chase stuff, but, the method to our madness is we like to buy pullbacks. And if we're not seeing a lot of names setting up on the long side with low-risk entry points, that tells us something.
Okay.
Go
ahead, Dennis.
Let's take the flip side of this then, because obviously we have resistance well defined the whole 1840s, and we're not seeing a lot of stocks, that we'd like to look from the long side. Do you see anything you'd like to short here? Do you see anything coming up to major resistance here and is due for possible pullback?
Well, that's a good point. Let's take a look at some of those names. I'll tell you what I am seeing a lot of. We work off of the daily charts with a 50-day moving average. Let's say a 6-month time frame and frequency. So if you can kind of get into that type of chart pattern on your screen, that would help immensely.
Okay.
A couple of names here. All right. Take a look at Baidu. Take a look at Baidu once.
Yep.
And, you can clearly see with Baidu, it was in a nice, clearly defined uptrend. Then the market fell apart.
Get my
No,
chart.
you're on Apple now. Am I behind?
Yeah,
You'll be about 20 seconds delayed actually, just with this is catching up. So
All right.
it'll be to Baidu in a second.
Got it. All right. When you look at Baidu, you can see the stock in a 6-month time frequency with the 50-day. It was in a nice, clearly defined uptrend channel from September through first of the year. Then, it came down, got slammed in the recent sell-off, and all it's done is snap back right up to the 50-day moving average, which when an issue tends to break below it, the 50-day tends to act as resistance. When it's above it, obviously, and it pulls back to it, it tends to act as support. So that's an issue that may have some issues. BEAV, same thing. Broke support at the 82 level, came down, hit the 74, and all it's been able to do is a snapback rally right up to the 50-day moving average.
What's the average on that? Or what's the symbol?
BEAV.
BE Aerospace you're talking about.
Oh,
Yep.
okay. Haven't seen that symbol in a while.
Yeah.
Okay, so 50 days your trigger then, huh? So if you have a stock break below the 50-day and an uptrend and then it comes back to that level, that's your bogey. So you see, in order for it to continue moving higher here, you expect it to get back over the 50. Just looking at this one, too, it looks like, I don't know if you're much of a Fibonacci retracement trader, but this one looks like it's almost right on the nose of 50% retracement. You had a high at $89, just under 89. You had a breakdown to 75.14, 7-point move takes you back at 82. So that's a good area. We'll see if I like this one. I might have to keep an eye on this one, especially if you got.
There's two ways to look at this thing. I mean, if you're looking to go short the stock, well, first off, if you're long and you want to get out, you're coming up into some overhead supply up at that 82 zone, for one thing. You got the 50-day. You're rallying up to the 50-day for another thing. Those are all things that if you're long and you're looking to walk away on a bounce, you might want to start to think about that. The other side of the coin is, if you draw a line and line up all your lows off of that 74 low. If you break that to the downside, well, then, you broke that short-term uptrend, off of the 74 lows. That's actually, one could say that's an actual long or short side trade trigger. For us it is. We're short that name as of yesterday.
Okay, good.
So we
Okay.
like to.
One last one here, and it blew away earnings here. Garmin, I just can't believe they're still making money with people being able to. I mean, you can do it on your phone. I mean, and when I'm in the car with Lisa, I mean, she's got her phone, she got all these apps and everything. I don't know what you need a Garmin for, but I guess they must make anything, other things. But 53.80, we just popped up to here in the pre-market. Any thoughts on this issue?
Oh gosh, I mean 53.80 in the pre-market, and here it closed at 47. I mean percentage-wise, I mean if you owned it, you got yourself a nice pop today. Why push it? If you don't own it, you're definitely paying up for the stock. I'm not one to like to chase things. If I see a stock go from 47 to 53 overnight, and it's going to open up, 6 points up, I'm not going to be buying that.
Right.
More often than not, you see a lot of stocks after they report earnings. Obviously, you're paying a premium for the certainty. I'm not going to chase them. I'll let them settle down, let the heat, let it all cool down, let the dust settle, and then I'll take a look at it. And it could be 3-4 days later. I'm just not one to chase stocks. More often than not, like I said, when you chase a bus, that bus stops, you're going to go splat right into the back of the bus. There's always something out there brewing. Why chase things?
Correct. Okay, one last question here from Violin Maker, and you were mentioning the 50-day average on stocks. Do you use that on all of them, or do you maybe go a little bit shorter term to the 10 or 20-day moving average for stocks, or is the 50 your staple and you stick to it?
Well, I always use the 50, but you bring up a really good question. Do you move to the 10, move to the 20? That all depends who you are and who you choose to be. Are you a trader? Are you an investor? What time frame and frequency are you working in? What works for you? What is the stock actually trading off of? Stocks are like people. There's all different types, and a lot of stocks will trade off of, all different types of moving averages. There's the EMA moving averages. There's the simple moving averages. I can remember when, I think it was Tesla, when it was down in the gutter, it wasn't near the 200-day simple, but it was near the 200-day exponential. So there was an issue that was trading off of a different moving average. Again, though, it all really goes back to who you are as an individual. If you're a really short-term trader, you have no need for the 50-day. You're looking for stuff that's trading above the 10-day.
Right. Okay. All right, Harlan. Well, thanks for coming on and giving us your outlook here and some things to look at in the market. We'll keep an eye on this BE Aerospace and the Baidu. We finally got you to talk about shorting a couple stocks here, a potential setup. So, thanks a lot for coming on. Have a good trading day, and surely like to talk to you again next week.
You bet. I'll be back next week.
Okay. Have a good day.
Take care, guys. See you later. Thanks. Bye.
Let's bounce into a little imbalance talk here, Joel. We've got some interesting ones. Obviously the imbalance has come out at 8:30, and there's been some interesting trades here. Like I was saying yesterday, this Merck seems to come out with a sell imbalance every morning and open up the lows. Was able to pick up the low, actually was short it coming in, and then I was short Merck here again from last night just because it's had a sell imbalance. It seems like every day. I am short it for full disclosure here right now. I'm looking to cover it on the opening print here again and possibly go long and reverse it. Looking at Merck and also looking at General Electric. Keeps having a buy imbalance every day. Same story. 112,000 shares to buy on GE, 38,000 shares to sell on Merck. This has been the story every day.
Wow,
they've been good fades.
Those are little amounts. I'm really surprised that. I mean,
not in the pre-market. In the after hours, like the imbalance imbalances at the close are huge because that's where a lot of institutions. But in the pre-market, when you're seeing stuff over 30, 40,000, it is influential because a lot of guys don't put their orders in there till 9:30. So you're seeing early orders here. Obviously, orders that are sent very early at 8:30 here, and now it's 8:54. So those are actually kind of sizable for this time of day.
How did you handle that GE trade yesterday? Because I saw that you took some heat. I saw you showed it at 25.99. I saw it went all the way up to 26.04.
You didn't like the
Did
5
you
cents
did
a
did
heat
you
I took.
reverse and go long when it went through 26, or did you like not even notice that you were busy with all these other stocks?
Well, it
Because
probably helps a little bit that I don't notice it as much. But yeah, I got short and I cover way too soon, like I always do. I think I covered in 25. I covered in the 25.90. So literally, I didn't make that much on that one. The best trades I had yesterday, the best two again, were Merck, which I bought off, which I actually got short pre-market, covered on the opening print down 30 cents. It opened like 55.17. And the other one was IBM. I bought the open and IBM, I think, 4 out of the last 5 trading days. And 4 out of the last 5 trading days, I'm instantly up like 50 or 60 cents. What's the IBM? Let's go look at the imbalance in that right now. It's 15,000 shares to sell. Every day IBM has open now. That's not very much here for IBM, but if it opens down $1 again or something, I'd be interested in it. It's trading down about 40 cents here in the pre-market right now. So I don't know. I keep playing. Once it works for me once it works for me twice, I keep playing until it doesn't work. And it's been working to fade the GE open and to buy the Merck and the IBM open. Eventually, that trade's not going to work. So, and probably once it gets too crowded, now that we're really talking about a lot on the show, could even get more crowded. But that being said, keep playing it until it doesn't work.
yeah, this 184 level in IBM is shaping up to be very good resistance. You've had a couple highs there. Yesterday's high, 184 on the nose. Previous day's high, or Friday's high, 184.43 here. Trying to get into that gap area in order to keep this move going in Beamer here. Need to get clear that 184 level, get a close above there. Dennis, just going back to our little debate here, and you just were saying not to fight the lily here, and that's certainly the case here. Still drifting up here in the pre-market, getting close to that $58 level. So. You would have been 20 cents from another lunch here, but
You were going to give me 58, eh?
yeah, I was going to give you 58 versus 57. A little bit early, though, here. Still moving up. Lily's still moving up. I don't know. It's going to take a lot to hold these gains for the whole session. But
213,000 shares have traded now, though. So big volume now is traded on Lilly. So that's telling you, we always say price has memory. You've had a lot of people transacting here in the 57 handle, which will help to support the price a little bit. If it gets up and trades a few hundred shares up in 57, doesn't mean nothing. When it trades 200,000 shares up here in the 57 handle, means a hell of a lot more. It means anything in the book it can probably chew through pretty good too. I see 30,000 at 56. I can't see the book at 57, so that might hold down the open a little bit here. This thing opens down the lower 57s. It could give you a shot. I think it might open a little bit weaker than where it is right now, but this stock is looking strong here. And I wouldn't be surprised if it does see a little bit of follow through. Although now you're chasing at 57.70, that's starting to get a little bit pricey for even me.
and what you're saying is there are people that are shorting it up here at these exaggerated levels. So they don't care for filling a gap or whatever. This thing comes down 20, 30, 40 cents, and they're going to be all over covering that short. That's the only thing. That's the only thing that's going to provide support to this issue.
Yeah, exactly. You have 200,000 shares been transacted here. So that's going to be, people are buying and selling here up there. So obviously, if you've shorted the stock here in the pre-market, you're going to be throwing your bids out lower because it's mostly scalpers probably thinking it isn't going to open that high. And sometimes you can punish those people as well. Let's look a few more imbalances just before we go to our other guest. Coca-Cola, 161,000 shares to buy here this morning. This was trading up last night after hours as well. I was noticing this thing trading up. I didn't notice any news on Coke here this morning. Maybe I just missed it. I'm just trying to see. I don't see anything jumping out to me on Coke, but it does look like it is going to open higher here, so it's going to get a little bit of a relief rally after destruction. A couple other ones I'll just fly through. I'm seeing a sell imbalance in Abbott Labs, ABT. Also seeing a little one in Bristol Myers. Seeing a sell imbalance in Citigroup for 69,000 shares, which makes sense because it's trading down 20 cents right now. And seeing a little buy imbalance in AT&T, which is interesting because AT&T is actually trading down. Both AT&T and Verizon were trading down a little bit pre-market there last night.
Yeah, AT&T here. The stock is trying to crawl back here. Was under the $32 level. Well-defined resistance up here at 33.50. Looks like you're finding support right at yesterday's low. Yesterday's low 32.63. You had another low at 32.51 here. So AT&T, a little bit of consolidation here at the 32.75 area.
I want to give you one more big level here before we go to the guests. Waste Management, which is getting downgraded by Wunderlich here today, is trading down another 40 cents after the destruction of $2 there yesterday. It's trading down here again, but we're coming into a double bottom here from February, January. 40.86 was the low January 29th, and 40.89 was the low February 3rd. I love it when he's take out a whole number because he can trigger some stops there. I'm looking for this thing, if it gets down 48.90 area, to possibly bounce off that level. So that's one level I really like here today.
Okay, we're going to have take a quick break. Have Tim McDermott on from the Nadex Exchange. We'll be right back. Welcome back, traders and investors. We have a special guest on today, Tim McDermott, Chief Compliance Officer at the Nadex Exchange. Tim, how you doing today?
Good. How are you, Joe?
We're doing okay. We're doing all right.
Great.
Just quickly, just give us a little bit of your education and your background in the markets, how you got to this point.
Sure. I am an attorney with a accounting undergraduate degree and a legal degree. Went into private practice for about 14 years, working in financial markets law, and after that went to a large exchange in Chicago where I was responsible for overseeing their market activity and enforcing rules for their fair and transparent open markets. And for the last 6 years, I've been the general counsel and chief regulatory officer at the Nadex Exchange.
Okay, could you explain binary options in the Nadex Exchange for our listeners?
Sure. So binary options are really a straightforward, limited risk financial contract, which is based on a simple yes or no proposition. And that proposition is at expiration, there are one of two possible outcomes for the trader holding the position, all or nothing. And so those contracts trade based on an underlying. They have a fair amount of volatility as the markets are proceeding, and the price at which the contract is being traded at any given time suggests the probability that that contract will close in the money. So if it's trading at a price of 40, that suggests that the market thinks there's a 40% probability that the contract will end in the money. If it's trading at a price of 75, there's a 75% probability.
Okay, and is there a lot of experience needed to trade these, or is it something that people can, get involved in just kind of, it's, as a novice, or is it, is it really something that you need a good background in?
Well, Joe, that's sort of the beauty of these types of contracts is they're very well suited for inexperienced traders as well as experienced traders. And the reason I say that is because for inexperienced traders, these contracts are limited risk contracts. They're fully collateralized, or by that I mean upfront, the the participants to any particular trade have placed with the exchange an amount sufficient to cover any possible loss they might have on the position. So they go into the trade knowing that they've put up as much as they're going to risk on the contract, and they're never going to get a margin call for additional money, and they're certainly never going to get a physical delivery of some, carload of cattle or something else that they don't want. So that limited risk feature is really good for the new traders, and because these contracts are binary contracts and they tend to have, particularly for contracts with an expiration value that's close to the market, that's trading around 50, a price of 50, they can have a lot of volatility, and that's something that experienced traders look for, and I think appreciate having the opportunity to take advantage of that.
Okay, so is this just for U.S. residents, or can offshore brokers trade with U.S. residents on this?
So currently, we accept as direct members of the exchange only U.S. residents, and we also are able to take on FCM members, brokerage firms, and the brokerage firms can accept customers from wherever their customer base comes from. But for the direct members, we only accept U.S. residents at the current time.
Okay, and who governs the exchange?
Well, we are regulated by the Commodity Futures Trading Commission, and we are also a self-regulatory organization. So we have a responsibility ourselves, independently, to make sure that our markets are fair and transparent and open and comply with the regulations, and and particularly that our market participants are complying with all of the rules and regulations that apply to our markets.
And are there day trading restrictions as far as the amount of trades that can be done per day, like you have in the equities markets, or is it governed differently?
We don't really have any day trading restrictions of that sort. What we do have is, as I mentioned previously, fully collateralized trading. What that means is you're not allowed to trade any more than the money that you have in your account at any particular time. So you can't overextend yourself beyond the funds that you've already deposited with the exchange. Similarly, we do have position limits. So if your position gets too large, for example, in our US 500 contract, you can only put on 2,500 binary options at any particular time. So that could be a restriction, but we don't have the type of day trading restrictions that you're referring to.
Okay, you guys must have had one heck of a battle with the exchanges, huh, when you were trying to get this venture up and going?
Not really, because it sort of makes sense because we don't really compete with the existing exchanges, the more traditional exchanges that you see out there. To tell you the truth, we really see ourselves as being a nice complement to, and in some cases even sort of an introduction to, those bigger exchanges that trade more traditional futures contracts. So somebody can come to Nadex, they can trade $100 binary options with limited risk, learn how to watch the markets, learn how to trade in and out of a position, learn how different underlying markets work, really learn the business of trading. And then once they've done that, they can add trading the underlying futures or the underlying FX market or other markets that complement the markets that we offer with that training and education. So we really don't see ourselves as competitors with those other exchanges, and we see sort of a symbiotic relationship there.
Okay, I got a few questions for Dan if you want to put him on.
Sure, I'll pass you over. Hello, Joe.
Hey, Dan, how's it going?
It's going great. How are you doing today?
We're doing okay. We're doing okay. Just trying to learn about these binary options here. And Tim started to go into it a little bit, but could you just go a little more, detail about the benefits of trading binary options? And I looked on your site. You guys talk about bull spreads. I'm sure you have bear spreads as well.
Yeah, I can cover both of those things.
Sure.
On the binary options, one of the things, and Tim mentioned it, is the limited risk. I've been in the markets for about 17 years. I've traded everything from equities to futures to Forex. And kind of my wow moment was when I looked at this limited risk. One of the big struggles that traders have, and you hear it all the time, is manage your risk, manage your risk. But they don't really know what that risk is, particularly in leveraged markets. With a binary option, and even with a spread contract, I know what that full risk is up front. So it takes away a lot of, I guess, that psychological aspect that we see where people that are using stops, particularly the newer traders, they start seeing the market move against them and they start pulling their stops away. This gives you basically time to be right, which is one of the big components of that aspect. Additionally, they're simple contracts and they really fit all level of traders. And I don't want to say simple as far as, they're only good for beginners. Because what they are is they're easy to understand, price is the probability, yet there are expansive strategies that you can use really for all market conditions. On the bull spreads, and we do have the bull spread contract, which is a little bit different than the binary. Rather than a 0 or 100 expiration value, it settles to the underlying market. And so it's more of a variable type of payout contract, but again with a floor and ceiling and limited risk. And while they're called bull spreads, you can also be long or short the market. It just depends on whether you're buying or selling that contract.
Okay, and you mentioned there built-in floor and ceiling levels. You just want to highlight that?
Sure thing. So, for instance, if I was looking at an oil contract, we may have oil trading at $95. I might have a range of $95 to $100. 95 being the floor. So if I'm long at, say, 95.50, that's 50 ticks, $50 risk. That's what I'd put up to secure that contract with a maximum reward of up to 100. If the market's trading near 100 and I have that same floor and ceiling of 95 and 100, I could sell near the 100 level and limit my risk that way without having to worry about putting a stop in and being stopped out. I basically have the protection of an option.
Okay, and can you just walk us through like a quick example here of like one of your shorter term options here, off the open, something that's available, or just a quick example here. Let's say you do it on the S&P 500 futures. Do you have anything based on that?
Yes, we do. We call it the U.S. 500. And so one of the things, particularly around fundamental news announcements, we always talk about risk and limited risk. Very difficult to do in the futures markets, particularly depending on the size of the account. If you're trading, let's say, in front of a non-farm payroll or a Fed announcement, it can be a very risky place to be in a leveraged market. By using these contracts, you can really lock in your risk. You don't have to use a stop because you have the protection of an option. And so if the market does take a swing against you and stays there, A, you knew up front what your full risk was, and you can't lose more than that. But B, it gives you time and opportunity. We often see whipsaws around these reports. And so the protection of these contracts allows you to basically live through those whipsaws and have time for the market to move in your favor if it decides to.
Okay, so options are good a lot of times when the markets are moving and they're volatile, and then there's also ways that you can take advantage of options in a quiet market by selling premium. Are there's the same opportunities in the binary markets in flat or quiet markets?
Absolutely. And that's one of the keys, particularly on the binary option. They're always going to be moving because of the time value built into them. They're always going to be moving whether the market is or not. There are also additional strategies. If you think the market's going to stay range bound, you can work options because we list multiple strikes. You can work options around the market, basically saying that your opinion is it's going to stay within this range. And so it gives you an opportunity in other times where you might not see any real trading opportunities to get any type of movement, a very low volatile situation, where you still have a trade that you can place in a strategy that you can use with limited risk, but that can capture an opportunity in those markets.
Okay, and what are the different time expirations do you guys offer?
We offer daily, intraday, and weekly contracts. So depending on what the time horizon is, they're very complementary to the underlying markets. So for instance, if you're very short term, you may look towards the intradays, or if you're trying to capture something around a known event, such as a report, you might look for the shorter duration one. If you're looking for something more fundamental, maybe over the next 2 or 3 days, you might look toward the weekly contract.
And which ones are the most heavily traded?
Right now, the intraday and daily typically see the most activity, which really makes sense because there are more intraday and daily contracts than what there are weekly. But we see a lot of traders, gravitating towards those daily and intraday, trying to capture the short-term movements of the market.
And do you get, arbitrage opportunities? I know they're not exactly similar contracts, but do you find people doing arb between similar products on the other exchanges?
Yeah, I wouldn't consider it so much arbitrage. I would actually consider it more of a complement. So if they're trading, let's say they're trading the ES on the futures side, or they're trading currencies like the euro, US dollar, they actually may be using these contracts not as arbitrage, but actually as a complementary contract to help mitigate or offset some of that overall position risk. And that's really what we see, and from the traders, that we see is that they're using them as complementary to mitigate that risk.
Is there cross margining available through the FCMs or not?
There is not cross margining between the exchanges. These are fully collateralized contracts, which again is not really margin. The benefit of that is there are no margin calls. I never have to worry about calling my wife and telling her I was on vacation if I'm a trader, that our vacation is canceled if I'm a trader, because I thought oil was going to 105 and now it's sitting at 85. So there's really not a margin situation, so no cross margining between exchanges.
And how are fees calculated?
Fees are pretty simple. They're basically 90 cents a side, capped at 10 contracts per order. You can trade more than that. So, for example, if I trade one contract, it's 90 cents. If I trade 10, it's $9. If I trade 100, it's still $9. And then there are various fees for expiration. I definitely encourage traders to understand the fees and check out our website for a full explanation of those fees.
Okay. And, any final tips for investors interested in trading binary options?
Well, with any vehicle and binary options in particular, always know the where and the when and the how. Basically, where am I trading? Is it in a regulated, transparent environment? Those are things you want to understand. You also need to understand the contracts. How do they work? How do they relate to the underlying market? And I think with Nadex and the transparency it offers, it gives that comfort level as well as safety of funds and a whole other slew of benefits. Now, one thing I will say, though, is also I'd encourage them to take a look at a demo account. Get in and understand, see how the contracts trade, learn the platform. And we do offer a demo account, and it's free to open an account with Nadex.
Okay, we've had Tim McDermott and Dan Cook on at the Nadex Exchange explaining binary options to us. Gentlemen, I thank you for your time today, and we'll definitely have to take a look at your site. Thank you very much.
Thank you, Joe.
Okay. Mighty Joe Young, are you out there?
I'm right here.
Do we have some good headlines, or are you just going to do like your boring music headlines today?
Mostly mediocre headlines. You know how I roll. But I guess you probably don't want the Sochi medal count update then, huh?
As long as Canada's not in first, I'm fine with it.
Do you know how many medals total the U.S. has currently, Joel, off the top of your head?
22?
21.
Oh.
You are off by one. Norway and Germany are leading the way with gold medals at 8 apiece. Russia and the U.S. have moved to the top spots for overall medals with 22 and 21, respectively. Moving on, Americans are back to their borrowing ways after years of deleveraging, according to a new report by the Federal Reserve Bank of New York. Borrowing to buy new homes, cars, and pay for college fueled a $241 billion increase in U.S. household debt over the past quarter. Total debt grew to $11.52 trillion. Mortgage debt increased 3.9%, or $152 billion, accounting for the biggest increase in total dollars. However, student loan debt saw the biggest percentage increase of 11.5%, or $53 billion. An 84-year-old nun was sentenced on Tuesday to nearly 3 years in prison for breaking into a U.S. nuclear weapons complex and defacing a bunker holding bomb-grade uranium, a demonstration that exposed serious security flaws. 2 other activists who broke into the facility with Megan Rice were sentenced to more than 5 years in prison, in part because they had much longer criminal histories. Although officials claim there was never any danger of the protesters reaching materials that could be detonated or made into a dirty bomb, the break-in raised questions about the safekeeping at the Y-12 National Security Complex. The facility holds the nation's primary supply of bomb-grade uranium. After the protests, the complex had to be shut down, security forces were retrained, and contractors were replaced. In her closing statement, Rice asked the judge to sentence her to life in prison, even though sentencing guidelines called for about 6 years. Please have no leniency with me, she said. To remain in prison for the rest of my life would be the greatest gift you could give me. She sounds a little sadistic there. So, Toyota Motor Company said the wage increases labor unions have demanded going into annual negotiations this year were surprisingly high. The car maker will wait until the negotiations are finished before saying whether it will agree to the requests. Senior Managing Officer Naoki Miyazaki told reporters on Wednesday in Toyota City, Japan. He said improvement in Japan's economy and the need to boost personal spending will be considered in the talks. Toyota this month reported profit quintupled last quarter and raised its forecast for the year ending March 31st to an unprecedented 1.9 trillion yen as economic policies under Prime Minister Shinzo Abe weaken the yen and boost earnings from cars exported out of Japan. Netflix has opened the floodgates and aired the entire season of its popular political drama House of Cards Season 2. And it appears a lot of the nation's couch potatoes, including President Barack Obama, were geared up for some serious binge viewing, a strategy that paid off big time for Netflix. On a U.S. cable network, 16% of the Netflix subscribers watched at least one episode of House of Cards on Friday. Cam Cullen, Vice President of Global Marketing at the broadband technology firm Procera, noted the company's website. Last year, that number was 2% on a similar-sized network over the entire weekend. That is a massive difference. CNBC reported NBC share prices hit a record high on Thursday just before the House of Cards marathon. What? CNBC reported Netflix share price hit a record high on Thursday just before the House of Cards marathon. Company stock has also jumped about 130% in the last year. The Netflix format of original programs combined with old movies has gained it an international audience of 44 million subscribers in 41 countries, which, according to The Guardian, watch over 1 billion hours of television and movies every month on the web-only service. As of Tuesday, the Netflix market cap stood at $26.33 billion compared to $10.61 billion a year ago. Kellogg says it will buy palm oil only from companies that don't destroy tropical rainforests to produce it. The Battle Creek-based cereal giant says it will require suppliers to trace their palm oil to plantations that have been independently verified as complying with the law and meeting standards for protecting the environment and human rights. Policy was announced last week and sets a compliance deadline of December 31st, 2015. Palm oil is added to many processed foods. Environmental groups have long pressured the industry not to deal with companies that clear rainforests for plantations, destroying habitat for endangered species such as orangutans and the Sumatran tiger. Activist groups that staged a rally about the issue at Kellogg's headquarters in November praised the company's announcement. And also last week, Kellogg announced it will open a new North American global business services operation in Grand Rapids that will employ between 300 and 600 people. The regional GBS center at 5300 Patterson Avenue Southeast will include employees in the cereal giant's finance, information technology, supply chain, and human resources departments. Employees will begin moving into the service center this fall. It is expected to be at full capacity in 2016, the company announced on Thursday, February 13th. Kellogg CEO John Bryant told MLive they chose Grand Rapids for the new center after looking at 9 possible locations around the U.S. as part of a new corporate restructuring initiative dubbed Project K. Bryant said the company chose Grand Rapids because 40 other corporations have created similar service centers in the area, creating a labor pool from which Kellogg hopes to draw. And several varieties of Hot Pockets have been recalled after it came to light that some of the product's meat had not undergone proper inspection, CBS Baltimore reports. More specifically, and more vomit-inducingly, some of the meat, if affiliated with the California-based Rancho Feeding Corporation, could have come from diseased and unsound animals, according to a news release from the USDA. The giant supermarket chain has pulled the Philly steak and cheese and croissant crust Philly steak and cheese varieties, according to CBS Baltimore. Well, you shouldn't be eating those anyways because they're disgusting.
Have you ever had one?
Yes, I've had one. I love how it's, lava hot. Like, was it Jim Gaffigan that does that sketch about Hot Pockets? How it's like lava hot on the outside and still a frozen block on the inside, and then it scorches the inside of your mouth.
Emily used to eat those, and I remember, I don't know, there was nothing in the freezer, and I went in there and I had one of those things. I think it was the kosher ham and cheese one, and I took
Ooh, that sounds like a winner.
and I took one bite and I put it in the circular file.
Yeah, yeah. I will admit when I was a kid I would eat them too, but not anymore. All right, I gave it up. So today's trivia tidbit, we are 5 minutes away from the opening bell. On this day in 1878, Thomas Edison was awarded the patent for his phonograph
Light bulb.
technology that made the modern music business possible came into existence in his New Jersey laboratory. Edison's invention came about as spin-off from his ongoing work in telephony and telegraphy. I think that's how you
Telegraphy.
say it. Yeah. In an effort to facilitate the repeated transmission of a single telegraph message, Edison devised a method for capturing a passage of Morse code as a sequence of indentations on a spool of paper. Today's trivia question: what competitor developed the technology further?
Alexander Graham Bell.
Just blurt it out whenever it comes to you, Joel. That's good for everyone else that's trying to guess and win the 150 commission-free trades. Well, since Joel blew it already, yes, it was Alexander Graham Bell, and his newly established Bell Labs developed a phonograph based on the engraving of a wax cylinder, a significant improvement that led directly to the successful commercialization of recorded music in the 1890s and lent a vocabulary to the recording business, cutting records and spinning wax that has long outlived the technology on which it was based. That wraps it up for me today, ladies and gentlemen. Just a reminder, the show would not be possible without our friends at Options House. They will give you 150 commission-free trades for signing up for an Options House account through this page. There's buttons at the top, at the bottom right. Click on through, open an Options House account, get 150 commission-free trades just because you listen to Benzinga's Pre-Market Prep. Even though Joel blurted it out today, we're still giving away the 150 commission-free trades to anyone that signs up for an account. So, can't beat that deal. Brent's nodding his head yes because he agrees with it. And now it's time for rating changes of note this morning.
Nice intro, Joe. Thanks,
You're
buddy.
welcome, Brent.
Okay.
Sorry there wasn't any music for you.
Okay, some of the top upgrades this morning. Macquarie upgrading shares of Fluor to outperform following earnings last night. RBC Capital upgrading shares of Raytheon to outperform. Evercore upgrading shares of GoGo to overweight. And the last one, Cowen upgrading shares of Red Hat to outperform. Let me check something on Red Hat really quick. I was going to say we should be seeing Red Hat earnings, but it looks like they reported in mid-December, so we're not going to see those results till about the end of March, actually. Some of the top downgrades this morning. Forest Labs got downgraded at 3 firms this morning following that deal yesterday. Downgraded at Buckingham, CRT Capital, and also the notable one, Goldman Sachs. Wunderlich making a call on some of the transportation stocks this morning, downgrading shares of Conway to hold, also downgrading shares of Knight Transportation to hold. Let me see if there's any other in here. I don't think so. Waste Management shares also downgraded at Wunderlich this morning. They now see the stock with a hold rating. Shares of Youku downgraded to sell at Maxim Group. Ticker is Yankee Oscar Kilo Uniform. I believe that is like the YouTube in China. I don't know. Anyone correct me if that is not right. I got a couple more here. Wells Fargo downgrading shares of Dollar General from outperform to market perform. And Solar City getting a downgrade this morning at Baird. They now rate the stock with a neutral. Do we have any responses on the YouTube of China? I think I got it right. Woohoo! Sweet. So we got about 2 minutes before the bell, Joel. Maybe let's just start off with this Yuku. This is kind of a rather momentous name recently. It is Yankee Oscar Kilo Uniform.
Isn't that the
YOKU.
YouTube of China?
Yeah, that's what I heard recently. Wow.
Yoku is, let's see what it's doing today here. This issue ADR, so it's warning, ADR, gotta be careful trading ADRs. I haven't looked at this one here in a long time, but let's see what we got going on Yuku here. Man, why I can't type here? YOKU.
You got it. I know you got it.
It's quiet right in the middle of yesterday's range here. I'll be keeping an eye open lower, 31.98 close. We are below that. Use that as resistance here. Looking 32 resistance coming back on the downside. Light support here. Light support until you get down to under 31 at 30.64. Just want to bring up KMP here. I thought I saw that pop across. Kinder Morgan Energy Partners here. That stock is trading lower here. Knocked it down in the pre-market. I didn't see any news in the Benzinga news feed. Made a pre-market low at 77.80. You did have a low back at the going back in December at 78.15. So I keep an eye on the 77.80 to $78 level as support here. Hold that, perhaps rally. Did have major support. Had all those lows at the 79.60, 70 level. Did break down below that. So if you do get a rally back up anywhere, 79.60 or 70 should be major resistance here. So, Shaky Jake, what you got going on for us today?
Good morning, Joel. Yeah, I'm not going to start with as many obscure names as usual. We're going to get started with Tesla, actually showing a little bit of weakness today. And the only reason I really care about a less than 1% drop in Tesla is because we do have earnings after the close today. So I'm really interested in seeing what the price action looks like today. We are sitting still above that $200 level, but I think things could get interesting if we go below that, especially ahead of earnings. What do you think of Tesla, both on today's session, but also kind of going into this earnings report?
Well, it's had a great run into earnings. Big anticipation built in for the issue here. I think that if I did have a long position in it, I'd either be trying to protect it, selling some higher calls. I mean, because you got some crazy premium in there. If you can, sell the weeklies like the 210s or something like that for a nice premium. Boom, boom. If you get $15 for them, then you're covered up to 2.25. On the other hand, if they do disappoint, then you do have a little bit of downside protection. Nice low it just made here. 201.72 was the low in yesterday's session. We've hit 201.62 so far in today's. Oh, actually, 201.36 was yesterday's low. We hit 201.62. I'd hold in it there on the long side. As long as it holds at 201.36. If not, I think you will slip under the $200 level.
Another Elon Musk company that's on the move to the downside today is Solar City. Did catch a downgrade this morning, so moving down about a little over 2%. That's Sandy Charlie Tango Yankee. Got a downgrade or a downgrade to neutral from outperform at Baird. They held that $81 price target. The report wasn't all that exciting. Basically, they're just saying that they think that there could be some some increases in production costs, and that they're not exactly sure about this coming report. Joel, what do you think of Solar City after? I mean, it's been on quite a rally the last couple of months. What do you think?
I think they're a little nervous about the double top. Is what I think. I had a 79.86 high January 17th. Got up to 79.99 yesterday here. So last time it got up that level, it had a big old drop down to 65. I think they're just a little bit nervous here. I think you climb back into that 79 handle here. You're going to find resistance all the way up, probably a big seller at 80. Coming back on the downside, if you took the heat through the 77.69 low this morning, not a lot of support under that until you get down to the yesterday's low at 75.
Another one that we've got moving on an analyst report this morning is GoGo, Golf Oscar, Golf Oscar. It's a wireless communications company here. They're up over 4% on a bump up at Evercore. So they caught an upgrade there. Basically, the report just saying that I guess the stock's down about 40% since December, getting absolutely smacked down. Evercore dropped their price target from 27 to 26 bucks, saying that it's a good time to get in. Price is looking good, and they said that there's this big class action lawsuit going on against the company. They said it's basically bogus. They expect the fourth quarter earnings to be strong. Essentially, they pulled together kind of a list of smaller reasons to try and defend an upgrade here, but it looks like the street is liking the upgrade so far. Breaking it above that $20 level with a vengeance. It looks like.
I remember when this thing was going absolutely nuts. I remember when it had this run up through the $30 level and just kind of had a couple parabolic days. This is like internet on airplanes, right, or something
They do, yeah. They do that, and that's I think they do. Some in no, I guess it's Boingo that does it in the airports. GoGo that does it in the aircraft. Yeah.
I don't like to gap up. I wouldn't like to chase it, but if it could come back down to this $20 level here, yesterday's close 20 right on the nose. I could see buying there at 20, perhaps risking down to the low of the move at 18.18. A little 2-point risk reward ratio. Get a little bit of that back. So that's what I'd be looking for.
Another one we're seeing moving to the downside today is a much larger company. It's U.S. Steel, ticker X-Ray. That stock's getting hammered this morning, down over 6.5%. There's a report out of Barron's, basically yesterday, just saying that steel prices are falling. They're quoting some Wells Fargo analysts who have been looking around. What they dug up is that the lead times for steel have dropped from 4 weeks to 2 weeks, which is a kind of an indicator that maybe the U.S. steel stock is going up to, or not the stock, but the amount of inventory is going up, or that companies are buying less. But they are seeing that steel prices are falling. U.S. Steel did get a favorable ruling from the U.S. Commerce Department last week or last night, saying that that they're going to impose some anti-dumping restrictions on importers, but it looks like the street's not really listening to that, and they're taking it below that $25 level this morning.
That's a big old drop there. 2 sticks for the issue. Opened up 25.18, 25.40 high. Coming back down to 24.80. I look at this low that you had, 24.97 here. Back at the beginning of February, so needs to get back over and hold this $25 level. The low of the recent move here when we swooned down in February was a double bottom at 24.46 and 47. So don't think they're going to get down to that level, but big move. And let's take a look at Alcoa. I mean, see what Alcoa is doing here in the day today. I mean, they're aluminum, right?
Yeah.
But a little bit different. And they're going to need all aluminum to build all those F-150s that we're going to be buying here in Michigan. Wow, well-defined resistance here in Alcoa at the 1150 level. Alcoa can't wait to get above 1150 here. Let's see. Wow, multiple highs here. 43, 44, 49, 45, 48, 42. Major resistance here at 1150, so needs to break above there to get back to the $12 level. If not, we could head back towards 11, but doesn't seem to be this news does not seem to be affecting Alcoa.
Well, we're looking at U.S. Steel's drop. Another major name that trades right alongside it is AK Steel. These are the two steel names that are most sensitive to steel price fluctuations. So if AK Steel's AKS, Alpha, Kappa, Sandy, for anyone following along on their own charts, these are stated as kind of the two names that are most sensitive to steel prices. So if your steel prices go way up, these two companies rally a lot. So this could be something to watch as kind of a pair trade here with similar behavior as U.S. Steel, although U.S. Steel seems to be the one that traders are focusing on the most right now.
Is it AK?
AKS, Alpha, Kappa, Sandy. That's the other one that's most price sensitive, along with AK Steel. or along with U.S. Steel. And then the two that are less exposed that traders may be jumping into now if they still want to play steel is Nucor, which is November Uniform Echo, and Steel Dynamics, Sandy Tango Lima Delta. So those are the other two names that are less exposed to steel price that could be another play here. So just something to kind of keep in mind on today's session when these steel stocks are kind of
Really
seeing a move.
just seems to be hitting X on this. The Steel Dynamics doesn't seem to be moving
Mm-hmm.
here. That's at $18. That is a resistance point here. Let's just take a look at STLD here. It's been trying to get above 1807, 1810 here. Tries to clear that level. You could be making a run up towards the $1850 level. Just wanted to just go back to this Lily here, and Dennis, I know, was getting all excited. He thought it was going to go to 60 today. But here's just an occasion where they jacked this thing up in the pre-market, got it to $58. Hasn't even sniffed it here in the regular session. Just opened up. Actually, if you look at the opening, Lily had a 58 pre-market high. Opened at 57.34, and that was only 4 ticks from the high of the day at 57.30, 57.34, and you've dropped down into 56.63. Need to drop another dollar to fill the gap from Friday's trading. What else you got for me?
Other than that, let's hop into some of the earnings reports from this morning. We did have MGM Resorts reporting its fourth quarter numbers. EPS came in at 11 cents versus the expected loss of 1 cent, while revenues came in at $2.5 billion versus the expected $2.46 billion. So a really strong beat on the bottom line there for MGM. Now, if you remember, some of the casino names have been doing really well in the reports recently. MGM not trading up on that though, actually kind of showing some downside here. So what do you think of MGM here?
Got a pop in the pre-market to 26. Got over the $26 level. Traded as high as 26.30. Not happening here though in the regular session. 25.74. Ran into a seller at 26 here. Just keep an eye on that current low right now. 25.68 was a low. 77 was a low that you had from yesterday's trading. So it's hit support here. I'd say another minor number at 25.51, but if they don't like this thing under 25.77, could be seeing the lower 25s.
So maybe we want to hop into some of the other casino names. LVS is definitely one that we've been I think a lot of traders like to watch. Las Vegas Sands maybe teetering towards that $80 level, just a little bit above that right now, down about 0.5%. So nothing too crazy right now, but it is just above $80. So maybe can get some action below that. Joel, do you see anything on LVS?
LVS made a high here at 80.50. That's short of yesterday's high, 81.13. That coincides with a high 81. You had a high at 80.94 here. So we peeled back from that $81 level here. The stock's starting to look a little bit tired here. To me, can't get back over 81. No major support until you get under $80. Had a low at 79.69 yesterday's trading.
And then the last casino name I want to look at is Wynn Resorts, which is Whiskey Yankee November for anyone that's on their own charts there. Again, just down 0.4%, nothing crazy right now, but do want to make sure that we're covering all the bases on these casino stocks if we're going to be seeing weakness on today's session.
Bases loaded here. Good old lost wages here. Looking at shares of Wynn, it's had a nice run here. This one's just hanging out here near the highs of the move. Had a high at 225.86 in yesterday's trading. Recent high and the whole time high of the move is 226 here. So like to see continued move above this 226 here. If not, could get a little profit taking. Violin maker is pointing out here Tesla took out that 201.32 low from yesterday, now back under 200.
Oh my.
People perhaps taking some profits here ahead of earnings down to 198.56. Just the next level, keep an eye on here, Violin Maker. If you're trading this from the short side, you had a low on Friday at 197 even here. Dennis is pointing out some strength here in Exxon Mobil here. Trading up 78 cents. Boy, opened up low. If you bought that open, only took a dime worth of heat here. Had a straight up rally, a buck. And the S&Ps have had a great move too. Just keep an eye on this whole 94.70 level. 94.72 was a high from yesterday. We've exceeded that up to 94.89 here in XOM. So maybe a big seller at 95 can slow this down.
Well, looking ahead to today's close, maybe we want to hop into one name real quick, which is Marriott International, Mike Alpha Romeo. I don't know if you see anything on this chart, but they are expected to report after the close today. And I don't know if the chart looked a little interesting to me. Maybe entering. I know you had that. Looks like almost a double top there. What are you thinking about this chart here?
Whew, wow, 51.46 today's high. The previous two's high 51.58 and 51.74. That also had a couple highs at the 51.50 area, so someone looking to take a piece off here. Like to see it get back above 51.50 and just keep going up to 52 here. I think the longer you just hang out this 51.50 level here, you might come back down. Did open a penny off the low of the day, so if you're buying this thing off the open, you got a nice buy here. Definitely at a major resistance point. And then if you go back to this issue, you got to go back all the way back to April of 07 to find this thing near the $52. So Marriott had some long-time resistance.
Wow. Well, it's 9:45. Once again, markets are mixed. What are you thinking of the S&Ps on today's session?
I think that was a spirited rally off the low from yesterday here, which was 1831 and a half. Hit 1830 in the regular session, 1831 for the day session. We've quickly come back up. Got to get back over that pre-market high. If the pre-market low held, maybe the pre-market high can hold as well here too. 1837.50. If in fact that you do get over there, just the way this market acted, I think you're just gonna be stubborn all the way up to the two highs at 1840. So looks like another day of just teasing here in the 1830 handle. That's our broadcast for today. Hope we've answered all your questions, gave you some good trading tips, and we'll be back with you tomorrow.